Welcome to another episode of Multifamily Monday. My name is Jesse Greer, and I'm the Vice President of Multifamily and Investments at Avison Young here in Northern Nevada. And today I have a very special guest with me, Robin. Robin, thank you for being on the show.
Thank you for having me.
Fantastic. So Robin is going to be the spearhead of a multi-part series discussing seller financing or alternative financing means. And really, where this came about is the idea with our last transaction that we had such a hard time finding traditional financing. I wanted my clients to be able to understand what different alternatives are out there, either being seller financing if they're capable, or alternative financing, which we'd also consider private money lending. So the very first person to start this series, which I'm very excited about, is Robin Malsbury. Robin is with North Star Lending Group, and they're actually based out of Minden, but they lend all throughout Northern Nevada. So Robin, number one, thank you for being here today.
Thanks again.
And secondarily, tell us a little bit more about yourself and North Star Lending.
Well, I have been in the mortgage business for 30 plus years. I have been a mortgage broker, mortgage banker, done all facets of different types of lending. North Star Lending Group was originated in 2007. And we are, again, a mortgage broker, and we do all types of loans.
Fantastic. So when you mention all types of loans, this segment is more specific to private money lending, but tell us the other types of loans that you offer.
Well, we do FHA, VA, conventional, USDA, 203K rehab loans, reverse mortgages, and private lending.
Fantastic. So all across the board. So if you need any type of financing, Robin has options. In other words, it's not just private money lending, but for the purposes of this video and for the purposes of our clientele having issues trying to source what I consider traditional financing, which is local bank financing, regional or national, she'd be the person to talk to. So let's dive into the private money side of things. So let's get the scenario of I have a client that's coming in. They're looking to purchase a multifamily property as an example or an investment property. We find that traditional banks are just pulling back. They're saying, hey, you know what? We're turning off the spigots to lending or we don't like that specific type of property type. You know, what do? Well, they go to you. So tell us about what the process is of what you look for with prospective borrowers, not only from them, but the properties as well.
Well, it's very similar to the institutional type loan because we are regulated by the state of Nevada. They require that we do verify income. However, because it is a private loan, we do have other avenues and different ways that we can do that. So we're looking for verification of income. We're looking for assets. We're looking for credit. The investors pretty much are the ones who are going to approve or disapprove of the property. The investors are going to look at those, very carefully and make sure that if they do have to take it back, that it's a property that they want.
Fantastic. So it's almost like creating a marriage or a union between the borrower and I guess the private money lenders that you partner with.
Yes,
right?
That is true.
So what does that mean then? In other words, when you have this money that's looking to be placed, right, for these borrowers, what do they look like? What type of individuals or entities are they? And are they single lenders? Are they a pool of lenders?
Depending upon the dollar amount, it could be a pool of lenders, depending upon how much is needed. And so they would all have to agree, on the property. We do not lend to entities, so we only lend to individuals. And, we can do several individuals. That's not a problem, but no entities at this point in time.
So when you're saying that you don't lend to entities, right, that just basically means that the individual is responsible for the loan, but ultimately they can still hold the property in an entity, right?
They can do that after the fact. So they can record a grant bargaining and sale deed into the trust, into the corporation, into the partnership, however, they wanted to do that. But the individual investors want to lend only to people.
Fantastic. So basically what they're going to need is personal financials.
Yep.
Now, how many years worth traditionally?
2 years.
2 years. Now, does it need to be a CPA certified? Does it need to be an actual tax return?
2 years tax returns.
Okay.
All K1s, W2s. We would also need business returns.
Okay.
For 2 years. 2 months worth of bank statements, mortgage payments. In this case, with it being commercial, I'd want to see the rental agreements to look at, the income coming in on the property.
Fantastic. So not only personal information, and see, that's where I would come in as well in helping Robin with this fact, because we have the profit and loss, we have the rent roll, and we're able to provide Robin, the story behind the property, the value add, or basically, where or why this would make sense for one of your lenders.
Right.
Right. So Now, that being said, the biggest question is going to be, well, Robin, you're asking almost the same thing as the lending institutions.
Yes.
But what are the rates like? And granted, we know that private money is not going to be like your traditional lenders, right? So where are you at right now with maybe points, interest rate, prepays? Kind of what are you seeing out there?
Well, first of all, we don't do any prepayment penalties because it's really not allowed technically by the state of Nevada financial institutions.
Good to know. Okay.
So depending upon the type of property, again, rates can vary anywhere from 6.5%, all the way up to 9% or so. It depends on each individual investor as to if they want a fee or if it's just, our fees, but, typically 2.5 to probably 3 points, plus all of, the other closing costs that are involved.
Which I think is pretty standard for the market.
It is, other areas lend at even higher rates and higher points, but we're pretty much stuck at that level.
So would you say then that the interest rate is more the risk tolerance that the lender is willing to look at and their comfort level with the property type?
You could say that. It is also dependent on the investor themselves because some investors just want higher interest rates than others. So that's why it's very good that, I shop the loan and see, which investor is going to give us the best rate and the best points. And then, based on the property, if they're accepting, of that property.
Now, in certain cases, timing can play a very pivotal role. In other words, if it's a very competitive property, the way that it's priced, traditional financing isn't there, so they need to go the private money route. But let's say they want to close in, a short time period. As managing expectations, what is your typical underwriting turnaround time and funding time?
Well, unfortunately, appraisals are running very, very behind right now.
So I'm going to pause you real quick because Robin brought up a very good point. So irrespective of if you say you want to close and you're still looking for financing, even if you go traditional or non-traditional, you're absolutely right. Appraisals are going to be the bottleneck. So great point.
Yep. So we're looking, normal process time is about 30 days. But I've been asking for 45 to 60. Again, commercial properties, they take longer because of the in-depth appraisals that they do, the higher cost, etc.
Yeah.
So, 45 to 60, I think, and, we go as fast as possible.
Absolutely.
So, we get everything up front, we secure our investors, we've got it pretty much nailed down. So it's just, however long the paperwork takes to get back.
And what Robin told me is that she has a very good team behind her as well, which she helps lead and coordinate. So in regards to the underwriting, you're able to really get on the different files that require maybe a little bit faster timing than others as well,
yes,
right?
Absolutely.
Okay.
Absolutely.
Fantastic. So when you look at the private money side of things, I feel like it's not too different than traditional financing when it comes to the other third-party requirements. So let's talk maybe escrow, title. What other requirements do you have that's traditional for this industry?
Well, again, it's escrow. It's going to be, the costs and the fees. We do require an impound account. So for taxes and insurance, they are required to be paid, at close of escrow. We run all of our notes through Evergreen Note Servicing to collect. All the impounds are held by them. And pretty much, it's the standard information. But
So when you mentioned Evergreen, in fact, you kind of gave away one of the next videos that we're having here pretty soon. And that's note servicing. So basically what Robin is saying is that they're going to find you the money, but they're going to work with a third-party company to coordinate the servicing of that loan. And we'll dive into that at a later time. You mentioned impounding for property taxes and insurance. Mm-hmm. How much do you require for impounding? How many quarters up front?
Well, Evergreen pays, quarterly taxes are due, but Evergreen pays semi-annually. So 6 months usually a close of escrow, could be a little bit more depending upon the date that you're closing. We require the hazard insurance to be paid, homeowners insurance, to be paid a full 12 months, and then they impound 1 month on top of that.
Okay, so just to clarify, so impounding for taxes and insurance, 6 months up front, but if it falls within the beginning of one quarter, it might be 8 months.
Could be.
And then you said, what was the third one again?
12 months on the insurance.
So 12 months on the insurance.
So full premium up front, and then plus another month. at close of escrow for the impound account.
Fascinating. So that could be maybe another bottleneck in working with insurance companies as well, right? I mean, they're usually pretty quick, but at the same token,
They've been really good. I have a couple insurance companies that run really slow, and it's kind of tough.
yeah.
But normally they've been pretty good, and I try to order those, after about 2 weeks or so into the process. I don't like to order them too soon. But we want to make sure that we've got it in so we don't have a bottleneck there.
Got it. So borrowers, just so you know, and basically that when you're going into this, know that the appraisal is going to be an issue, but we have our contacts out there. We're able to talk to the right people, and if we need to expedite it, we can. Sometimes there might be a little bit of a fee. And insurance is going to be an issue as well. So make sure that we have the right insurance personnel in place to bid out those properties with the requirements that you're looking for.
Sure.
Okay, fantastic. So is there any other nuance that a borrower should know about going into the private money side of things?
Well, I guess what we didn't talk about is the good thing about private loans is that it's not only the properties, but it could be the credit. So if the borrower has an issue with credit, we might be able to work, around those. We might make something be paid off.
Got it. Okay.
But we have some latitude with the private loans. So there's really no other nuances other than the term. The terms do vary. They're not your straight 30-year fixed. They could have what's called a balloon.
Okay.
So even though they may be amortized over 30 years, they may be all due and payable in 7 years. We have a lot of latitude, again, depending upon if it's non-owner occupied, we have more latitude than we do with like an owner occupied. So talking commercial,
Yep.
We could have some maybe interest only circumstances. We could have a shorter term. We could have a principal reduction. Let's talk about principal reduction just real quick. So you might be into the loan maybe 12 months, and the investor says, well, I want you to pay some extra money, after 12 months.
Okay.
So they could require a principal reduction, basically saying maybe $5,000, $10,000, $15,000, $20,000 on a periodic basis, which lowers the principal balance.
Now, my guess is that term within the note would be agreed upon before it's executed. Yeah.
Absolutely.
Yeah.
So everything is done within the escrow instructions, the note, the deed of trust, all of that would be in there.
It's interesting. You mentioned 7 years as an example, and I think all loan length time varies based upon deal size. But traditionally, in the realm of what we'd be looking for private money, I can't imagine that most loans would go past 3 years.
Well, when you're looking at an owner-occupied, and I know we're talking commercial here.
Sure.
The CFPB requires us to go out to 7 years.
Okay.
Okay. So when you get to commercial, that's why I said you have a lot more latitude and non-owner occupied deals. So again, we do also do construction loans. So our construction loans are a year. So, and we could do, the borrower could request a 3-year loan. The borrower could request a 5-year loan on a commercial.
Got it.
The investor could say, well, I only want to do this one for 4 years. Well, that's where our negotiation comes in, rate, points, terms, etc.
Got it. Fascinating. Well, there's a whole gamut of what you need to know going into this, and I feel like we've dove into a lot of it, right?
Yeah.
But there's definitely more because each deal is deal specific. So, Robin, if they did want to talk to you in more depth about certain deals, how do they go about getting a hold of you?
They can call me at 775-783-8088. My cell phone, 775-722-1558. Or my email address, Robin, ROBYN, at NorthstarLendingGroup.com.
Fantastic. And we'll have that information within the substance of the video as well. So that'll be on there. But Robin, thank you again for your time today. And I really appreciate your insight into the private money lending world.
Thank you so much. This has been awesome.
Have a great day.
Thank you. You too.
Bye.